Marilyn, what do you expect from the dot plot and from November? I mean, this market has been overly optimistic throughout this Fed rate hike cycle.
Yeah, so in terms of the dot plot, as you know, at the moment it's essentially showing sort of 5%, 5.6% year end this year, down 4.6% end of next year. I think we'll be focusing on, we expect them to remain pretty much the same for this year, given that while we think they'll be on hold, they are still very, very data dependent. The question is, I think, more whether we could see an adjustment to that, but more I think it's, again, next year, what could we see, whether we expect to see, and whether the voting members expect to see rates higher for longer. And as you know, we do expect, at the moment, they're showing a cut of 1% in total next year, but from where they currently think they'll end this year. But we could see, next year and also further out into 2025 as well. If they expect rates to be higher for longer, then I think that will have an impact.
What has to happen for a 1% cut, Marilyn? What has to happen for 4 cuts next year?
So at the moment, the economic data, I think, has consistently surprised to the upside, both for for the FOMC as well as for many market observers as well. And I think what we would need to see for them to change, or what they're expecting next year, is to see if they were to maybe reduce their forecast further for next year in terms of interest rates. We would probably have to see more deterioration in terms of economic activity, the US economic outlook. Also in terms of inflation, it has been moderating, it is coming down, but it's still above the target. And so, but I think really what we would need to see is a deterioration really in economic activity, in GDP, in the unemployment rate, in the labor market. And at the moment, we're just not really seeing that in terms of the data.